Good afternoon, everyone. And it's a pleasure to be here in front of you, esteemed judges and the fellow co-founders. I'm from CC Network by D3 Labs. We are building a public permission layer 1 in conjunction with financial institutions across Southeast Asia, primarily starting in Indonesia first, to be able to help financial institutions adopt real-world asset tokenization. The reason that we are able to access financial institutions and regulators in Southeast Asia, especially Indonesia, is because of the strength of our co-founding team. We are co-founded by Chuning and Tigran. They used to be the co-founders of the largest regulated exchange in Indonesia, Togo Crypto, and they came out to start this after selling them to Binance. We are also augmented by a group of TradeFi professionals with more than 50 years of experience in TradeFi, ranging from DBS, MUFG, Macquarie, and Goldman. We call this a combination of DGen and TradeFi professionals, and we hope that this can bring a different view to real-world asset tokenization. Real-world asset tokenization has already arrived, and where you see our bulge bracket funds such as BlackRock, KKR, JP Morgan, and Apollo adopting them. In Southeast Asia, we also do see the fact that a lot of banks are jumping onto this bandwagon, but it is not just as public. And a lot of times when they come in to speak to CC Network, the question they ask is, how do we do this in the regulated, compliant manner in conjunction with regulators? And that's where we come in with our layer 1 public permission chain. The reason why this has taken on such an interesting view is because of the fact that in the asset management industry, we see exponential growth. That means there needs to be constant innovation amongst these banks and asset managers in terms of trying to find out technology as well as a wider base of investors to come into the asset management industry. Existing layer 1 infrastructure, as we see today, is not fully tailored for that. And hence, what we intend to do is to change that. And we do it through the collaboration and partnership with financial institutions across Southeast Asia to understand what is required. This is an overview of the CSEAD network. We are EVM compatible so that we can actually work with as many public permissionless chains as possible as partners and networks, while also having the backing and the support of 6 Asian financial institutions to come in to be able to tell us their pain points around how do we make sure that RWA tokenization works. Think about it as we are the tech layer, but we also serve as the bridge between understanding what the regulator requires to build regulator RWA and what the bank requires to make risk management and risk mitigation a proper manner in order to scale. These are the 6 banks that we are working with, and they potentially will partner with us, not just as a founding council, but eventually, after the network layer 1 is built, as founding validators. Across these 6 banks, we are looking at $500 billion in terms of balance sheet, and we are already working on private permission blockchain layers with some of these. The others are our investors. We are looking at their balance sheet and looking to help tokenize them for distribution in order to allow access and distribution to a wider network of investors. So, what are some of the feedbacks that we hear from these validators and these financial institutions? Before CSEAD, where we see, and I think this is not something which is what I call uncommon, is the fact that we have AML risk, we have scams, legality, and validator risk that exist today in various public permissionless blockchains. With CSEAD, what we built is a public permission layer 1 that helps to balance asset, capital, and with the banks as validators to be allowed a combination of that for a safe and risk-managed way of originating and distributing RWA assets. And this is what we are after. Hence, CSEAD network has a very simple proposition. We are built with the feedback of financial institutions and regulations for licensed and regulated financial activities in a compliant manner, where we are in talks with regulators around the potential to build certain elements into such a layer one, such as a queue switch. In the whole RWA ecosystem, you can think about the CSEAD network sitting right in the middle as a tech provider in between distribution, which are the RWA asset owners, with the tokenization platform and other layer one and layer two public protocols as distribution. The tokenization platforms such as ADEX, such as Toko Crypto, are licensed regulated exchanges that can provide investors for RWA assets. The L1 and L2 protocols, through bridges that are built, are able to provide wrapped RWA tokens in a defined manner where another channel of distribution can happen. Where we want is to sit into the middle, where we are not just a tech provider, we are also a partner in understanding and allowing all parties to risk manage what this whole process is about. So right now, where we are working on is on the high yield asset base on the balance sheet of some banks. But the tech that we are building out eventually can be cash flow based. That is around mortgages, bonds, and notes in the medium to long term, as well as ownership based, which are such as real estates and stocks, eventually even being able to build derivatives and commodities around such a platform. So we do already have use cases as mentioned just now. We have private permission POC use cases with some of the banks that we already see, but specifically on the RWA use case, where we are is a committed tokenization from a leading state-owned bank in Indonesia with 700 million worth of assets as what we call a semi-NPL. The way we want to build this is to allow this Indonesian bank to access international capital in a US dollar denominated manner for international investors to come in. Right now, most of these assets are taken up locally, domestically in the IDR format, but with RWA tokenization, we hope to solve a real-world problem by bringing international investors into emerging market where capital control currencies typically serve as a problem. Last but not least, this is our roadmap. We have started our CC development actually last year by working with banks on private permission enterprise blockchain solutions, having their trust, and then slowly building out. Right now, we are in the midst of finalizing our founding council and validators, launching our TG and our testnet in the next 2-3 quarters, and hoping to go live by the end of next year. Thank you very much.
All right, thanks. Judges, any questions?
What is the difference between like ADDX and your platform?
That's a great question. ADDX will partner with us essentially. So for them, they are a tokenization platform that helps to distribute the RWA. They are licensed in Singapore, which means right now they target accredited investors. We serve them upstream by working with the asset owners, the RWA owners, to tokenize such real-world asset, manage, for example, if this comes out from IDR, the FX and the interest rate risk, so that they can sell US dollar denominated RWA tokens. So they will be the platform as the distribution. We will be the upstream as a tech provider to tokenize that and also help in terms of managing some of the economic risks. That's how we work.
So when we talk to RWA projects, one of the things that we keep running into is that they are looking for auditors that are capable of handling large deals, yet being able to do on-chain transactions. I mean, E&Y screwed up the FTX audio and, transfer money to the different wallet. So do you have design partners on that front that can handle large deals for RWA and yet be comfortable doing on-chain transaction?
Yes. So the way we approach it is slightly different. In Indonesia, under the equivalent of the SEC, that's called OJK, they are coming out with an investment management sandbox where we are talking about innovation within the investment management space. We are going to be part of the sandbox with the state-owned bank that we showed just now. And the way we do it is this, right? We are not here to real-world asset tokenize the Monets or the Lafitte's of the world. I think those to me are what I call trophy pieces, right? People want it because they want to open the Lafitte for people to drink. When we tackle this, we go to the state-owned bank, we identify a portion of their asset class that they wish to sell down, and they hope that they are able to, what we call, approach international investors on. And this is already an area where in the traditional finance world, it is being done. We call it private credit or distressed debt space, right? But most of it is done in Indonesia in IDR denominated format, where a lot of the Indonesian family office typically snap them up. There's a gap here. International investors want to go into Indonesia saying, hey, look, I want to target this yield of 12 to 15% a year. But because of IDR, because of capital control, I can't do it. Real-world asset tokenization serves to convert all these, build the FX and the IR buffer, the interest rate buffer, and be able to sell those in USD denominated format, right? We do all this in a regulated environment in the OJK sandbox. We do not go out to the world to say, hey, look, we are going to launch it to the ADEX of the world.
Yeah, I think you're talking about different things. Because in your tech stack, you said you have on-chain validation by financial institution,
Correct.
right? That the asset is actually still there. My
Correct.
question is that who are those institutions that big enough yet comfortable enough with on-chain transactions?
These are some of the banks that we are already working on. So we are talking about these gentlemen here. These are some of the banks that we are already talking about on on-chain transaction. We are not going to distribute everything that they have on-chain 100%. What we are doing is a big part of their asset will still be done in the TradeFi manner. For example, if it is a 10 million issuance, 5 million will be stepped up traditionally by a family office, right? That itself will be regulated. The due diligence that is done there, the audit that is done there is going to be the same as buying distressed debt. We are distributing to the distribution platforms and layer 1, layer 2 for the other 5 million. Because what we see is an expansion of, an investor base into that. So in that case, in that sense, we already do have the lead investor coming in, looking at performing proper due diligence in the traditional finance manner, audit in the traditional finance manner in this distressed debt asset class. In a way, even without RWA tokenization, this is still an asset that is sellable. That's how we do it. Yeah.
All right, cool. Yeah, thank you so much for your wonderful presentation. Oh, you have something else to say? All right, cool. Thank you so much.
Thank you.
Let's hear it for him.
Thank you.